100%. Now, of course, it does affect different products differently. And so things like PPI, I usually would place a little bit more importance on for people that are trading currencies. But the reality of it is, all of these items play a significant role in the performance of whatever product you're trading. So if you're trading a currency, PPI is going to be important because it's going to help you measure the strength of $1 versus another. The same is true of CPI, PCE, all of these things that we're looking at, but in different ways. PPI, in and of itself, is not going to affect the SPY. It's not going to affect the price of oil, generally speaking. But what it is going to do is it's going to change the bodies that regulate those items, the bodies that play a big role in setting the price for those items. For example, the Federal Reserve with inflation and their interest rate perspectives. As these news events come out, it's going to affect how they move forward. So it's incredibly important for every trader to at least know what's going on around these events so that they could be prepared for the potential volatility and long term direction of these different assets.
Fantastic. And the beautiful thing is, if that made no sense to you, Aaron's about to explain exactly what PPI is and get a clear understanding on these assets. How good's that? All in one
Absolutely.
place.
Absolutely. Absolutely. There you go.
Aaron, you feel free
Awesome.
to just take it away and teach these lovely people about PPI.
Beautiful. So let's jump right into it, guys. So these we've already spoken about CPI, PCE. These are two very similar products. What we're looking at in terms of inflation, but PPI is a big divergence from those two. So it's going to be really interesting to jump into it. First and foremost, what in the world have I been talking about in English? What is PPI and why does it matter? The PPI is the producer price indexes. It's a group of indexes that is it measures the average change over time in the selling prices received by domestic producers for their output. The prices included in PPI are really from the first commercial transactions for many products and some services. What that means is people make things, companies make things, and they sell those things to other companies who then sell it to you and I. This is what's being measured in PPI. CPI and PCE measure things a little further downstream, how it affects us, but PPI measures things upstream. And we'll get a little bit more into that as we break things down. Now, unlike PCE and CPI, it's a basket that they're looking at in terms of what makes up PPI, but it's only kind of a basket. The basket is a little bit more complex than what's used for PCE and CPI. It's still a group of different products they're looking at, still a group of different services, but it's constantly changing. The most important thing that we can look at for this particular event is that there are three main focuses centered around commodity classification, commodity based final demand, and industry classification. So, to break that down a little bit further, we'll hop into a couple of examples. But as a quick overview, the CPI measures stuff like the cost of living, whereas PPI measures real growth in output as well as input for these big manufacturers. It's not including things like, imports. It's more focused on things that are affecting the companies within a given country. And again, all the data that I'm looking at today is from the Bureau of Labor Statistics here in the States, but these numbers are super similar and they apply to more or less every country that puts out a
I
PPI
did the
number. So
same
remember,
thing earlier
everything is
today.
intertwined.
I
Right,
did the same
right. It
thing all the
happens to the
time.
best of
I
us.
keep calling different economies and central banks companies. I mean, they're
Right.
run like companies, right? It's very similar. We can stick with that.
Look, I'm in the States, man. Our last president was a literal real estate tycoon. So it feels more and more like a company with every passing day. But we could talk about something a little bit sexy in Tesla. Tesla's a really good example of a company that would be really affected by PPI and therefore affects us as the consumer. I'm sure everybody's heard of Tesla slashing prices on a variety of their cars, their trucks, their insert weird offerings here. This is the sexy lineup as Elon has called it here. And we can really get into things and help to understand why PPI is important and what it is by looking at a Tesla like company uh, and their supply chain.
Hmm.
So, Tesla, like any other company, they have costs, they have things that they need to bring to the table through their supply chain in order to produce their vehicles. This is what a cobalt mine looks like out in Africa. They have an incredible importance, and they have incredible. They put an incredible importance on this particular product because it helps them to produce their batteries, right? Just like we've been talking about with everything else here in terms of like supply and demand. This is something I borrowed from our our last charts. Uh, so the supply and demand of things changes, and that can change the price. But now we're looking at it from the perspective of a producer. So for Elon, not necessarily the price of the snack, but for the price of cobalt, if demand changes or supply changes, it could change the total price and total quantity of a given product for their particular supply chain. That's incredibly important because that comes downstream and affects us. If the price of cobalt jumps aggressively 50% and now it's more difficult for Tesla to produce their sexy lineup of cars, it's not going to be as sexy for us when we go to pay the monthly payment for that particular vehicle, right?
Hmm.
So that this is a good understanding. This is a good start to understanding why the Federal Reserve, why the Bank of England, why the ECB, the European Central Bank, would even take a look at numbers like PPI. But unlike something like CPE, this is something on the front end that lets them forecast what could potentially be down the road. And there are several parts of the supply chain to take part of here. Like it's not just cobalt; it's something like aluminum. Now Elon is trying to build a new lithium factory in Texas. There are also different types of innovation that we're looking at in order to try to make things less expensive for the average consumer down the road. All of these things, aluminum prices, lithium prices, battery prices as a whole play a role in PPI. But as you can see, aluminum and lithium, those are just two basic raw materials. PPI looks at the raw material as well as the finished product that's being sold. So in this case, the aluminum price as it's being mined is taken account in PPI. The lithium price as it's being mined is taken account into PPI, but also the price of the battery when it's sold to Tesla from the aluminum refinery, from the lithium refinery, that's taken into account as well in order to give us a really beautiful picture of what is going to change for consumers down the road price wise.
You can really see the way it's delivering that full scope, and that's what I love
100%.
about it. It's from
Yeah.
start to finish. I mean, you usually just get little glimpse here, little glimpse here. You can see why central banks and governments love using it because I can picture it. I mean, we're heavy lithium miners out in Western Australia here, and we bring them up and we ship them off and wherever they may go and when they turn into. But it's just so interesting to be able to picture that, like mind it, okay, this is what we've got, this is what it is, and then when it turns into the finished product, this is the price, and you can evaluate not only the margins that some of these companies can make, but the actual full scale to which an increase in these raw materials is affecting production output. It's incredible.
Absolutely. It's great, and that's one of the reasons why, like you said, central banks use it so often. But it's also one of the reasons why it's not talked about as much because it doesn't really affect you and I. It's not
Mm,
the sexiest thing. It's not the biggest headline. PCE and CPI are usually measured in whole values of a percentage point. So 1, 2, 3, 4, 5% is the change there, and PPI is measured in fractions of a percent. So like the forecast for PPI coming up this week is something like 0.7%.
yeah.
Usually when we're off by 0.1%. So it's a lot less volatile in a way, but it's still incredibly important. And keep in mind all of these pressures, all these inflationary pressures all of these price changes, they don't always convert to a change in the particular asset. So we've been looking at Tesla. If you follow trading at all, you know Tesla's been going ballistic because Tesla's always going ballistic. It seems like ever since that split, that there's no ceiling for them. And although this chart, you can see it's aggressively up and down. I was going to use candlesticks, but I feel like this chart is just so compelling on how volatile Tesla has been. As you can see, we're definitely not we're not here towards all time highs here, but the reality of it is we're still up 59% from the beginning of the year. And Tesla has experienced a lot of supply chain issues. They've experienced a lot of what we would call inflationary pressures that would be measured by PPI. Things like their cobalt has gotten more expensive, lithium has gotten more expensive for a lot of their cars, and yet they're still lowering the price of their vehicles and their stock price is still going up. So remember that this is a measure, like all the other measures that we've talked about for inflation, that looks at the market as a whole. This is something that's supposed to be a tool for economies, not just individual producers, because the reality is for individual producers and manufacturers, there are so many things at play. Their supply chain is only a piece of the pie, right? When you look at the SPY, of which Tesla was just brought into in the past couple of years, it's doing great. The S&P 500 is doing fantastic, 8% year to date. We're just now getting into May. That's amazing. Most investors look for 7% in a year,
Mm.
but it's nowhere near the 59% growth. So keep that in mind that one particular performance of one manufacturer is not always going to have a huge effect on the market as a whole. We're really looking at the total economy. So we talked a little bit about FOMC last week and what happens at these meetings for these central banks. What does it actually mean when a good number, a bad number, a neutral number comes out? Well, last week we talked about how the Federal Reserve had raised interest rates again for what feels like the 80th time in a row to September 2007 levels, which is something in and of itself.
Yeah.
But the reality is, as they're looking at these inflationary numbers, and this is true for every central bank in the world, if these numbers don't come out good, if these numbers are more than they estimated, more than they forecast, then they'll have to continue raising rates to fight. Now, if it comes out neutral, if it comes out positive, and their work seems to be working out for them, then as you can see in this picture, Jerome's going to be a little happier. He's going to be given a thumbs up because he'll have more room to pause rates, which
Yeah.
seems to be the direction the Federal Reserve is leaning.
That's what really worries me about the Bank of England rates. And I know we talked about that. Sorry, the CPI coming
Yeah.
out of the UK. I know we talked about that a lot last
Yeah.
week. But that's what worries me so much is they put in so much effort, and I mean the population copped it, right? They copped it. They put in the hard yards, short term
Yeah.
loss, long term gain, just for, I mean, it not to be enough, and now they're in a real sticky situation on which way they go, and this is something I spoke about just before in morning coffee, is that idea we need to keep an eye on these assets because there still can be a lot of surprises along the way, and are the Fed going to go with the safe play and go real harsh, like smacking a kid's bottom when he's done something wrong, or they're going to try and nurture him by saying negative words. Yeah, it's the two different things here, right? It's modern day
Right.
parenthood and the old school. You get a smack if you did something wrong.
Right, right. And to continue on with that analogy, like the Fed, all these central banks, they have so many tools at their disposal. They could they could just pause rates or say they're going to pause rates. And this applies for any bank really. They could just say, you know what, we're thinking about pausing rates, which will cause the market to start considering, hey, for that next meeting, they're not going to raise. And then a week before the meeting, someone could come out and say, we're really thinking about raising. And that could have the same effect on the economy as them actually raising. So
Yeah.
right now, you're 100% right. The population in Britain, I really feel for any of you guys out there. Please say so in the chat if you're from Britain and what area. But they're taking it on the chin, and they'll continue taking it on the chin. It looks like hopefully we start to see these inflation and pressures start to drop, and hopefully we start to see different pieces of the puzzle start to come together and inflation slow down. But the reality of it is, if it does not, guys like Jerome Powell and those out in, I mean, even the Bank of Australia, I mean, they raised it 25 basis points out in
Yep.
Australia as well, right? So uh, it's a tough
It
situation,
is. I mean,
but
when
that's why it's
the
so
England
important.
printed that CPI data, I can imagine, especially with it coming out tomorrow, right, for the US, the CPI data tomorrow. Am I right in saying that? I think I'm right. Yeah, yeah,
Tomorrow, I know we have, yeah, we have additional CPI tomorrow. We also have PPI this week, and we have a couple things going on.
yeah. But I can imagine there's a
Yeah,
few people just looking, going, "Oh, hang on a second,
oh
what
yeah,
happened
sweating
over
bullets.
there? Like, are we in the same boat?" And I can imagine there's a fair few people, fingers crossed, expected to come in year on year pretty flat, but let's see.
Right. And that's the thing too. What the expectations play such a big role in all of these different news events. For something that's a little bit more tangible for a lot of traders is, hey, when this number comes out, it's going to affect whatever market you're trading in. If this number comes out at 4 p.m., it's going to affect the market. If it comes out at 3 a.m., it's going to affect the market. So keep that in mind. Keep in mind when these news events are happening relative to when you're trading, because although it's not going to change your swing trade that you have on for 3 days, if you're scalping, if you're trying to day trade, this is a really good way to get caught in some whipsawy price action.
Absolutely, absolutely. We talk about it. It's happened so many times at the firm. We'd get an email, "Hey, what happened? I had my stop loss in place," and it's not a matter of that at all. It is, you were exposed at a really volatile time, and rapid movements can happen regardless of your risk management. So yeah, especially I think if you're a swing trader, you got a little bit more leeway, even if you want to hedge during the time and swing it in. But
100%.
if you're day trading or
100%.
scalping, I mean, yeah, you got to be careful. You got to be real careful.
It's so dangerous. And the worst part about it is, look, we're all retail traders here. We're doing the best we can to grow our accounts, but the reality of it is, these markets are run by people that are looking at very, very, very big, large pictures. Guys like Jerome Powell, he does not care about your 10 lot on the euro dollar. He does not care about your options position in Tesla. If he
Mm.
if he decides he needs to do his job and raise rates by 100 basis points, he's technically within his rights to do so. And it leaves us in a tough position, to say the least.
Definitely, definitely better to be out of it. Definitely